It could be a big week for the US markets with an economic calendar that is set to put inflation and bond yields back in the spotlight. Ebbing and flowing throughout before soaring at the end of the week, the Dow Jones closed at a record high of 33,800 last Friday. The tests are going to come thick and fast this week, however. First up is the 10-year Treasury bond auction on Monday. This time in March, there was enough demand to reassure investors and cause yields to dip slightly. And though in the interim 10-year yields have touched 13-month highs, they fell to a fortnightly low in the aftermath of a dovish set of Fed meeting minutes last Wednesday. Monday will see demand tested once again as the Treasury auctions $38 billion in 10-year notes. And the Dow Jones will be watching carefully to see what the uptake is, to see if that demand has risen or fallen compared to the demand seen in March. There's no let up then on Tuesday with the release of the inflation reading for March. The standard number is set to rise from 0.4% to 0.5%, while the core figure is looking to climb from 0.1% to just 0.2%. If those readings come in as forecast, then the market's concern over inflationary pressures should arguably continue to retreat. Obviously, a better than forecast figure, quote unquote, better than forecast figures for both of those readings could start to give the Dow and the rest of the US indices a headache, especially given their sort of all-time high or near all-time high levels. Something worse than forecast, meanwhile, could cause a bit of a bump for the Dow Jones. Import prices are then set to fall from 1.3% to 1.0% on Wednesday. The day also sees an appearance from Jerome Powell that evening, which will likely provide some inflation and bond yield commentary after the events of Monday and Tuesday. Thursday is then headlined by March's retail sales data. The standard reading is expected to rebound from -3% to 5.1%, with the core figure seeing a similar improvement from -2.7% to 4.8%. Those numbers are joined by the Philly Fed Manufacturing Index reading, industrial production, and the usual Thursday jobless claims. Friday sort of takes the pressure off slightly stateside with consumer sentiment, building permits, and housing starts figures. However, what could change the complexion of Friday's trading is a rather significant set of numbers out of China overnight. The first quarter GDP reading from the country is expected to almost triple from what it was in Q4, rising from 6.5% to 18.3%. Elsewhere, the numbers aren't expected to be quite as rosy. Fixed asset investments is expected to fall from 35% to 27%. Industrial production is expected to be down from 35.1% to 18%. And most worryingly for the markets, retail sales are expected to be down from 33.8% to 28%. Obviously, by Western standards, those numbers are unbelievable. But investors will be more concerned with which way the arrow is pointing than the relative strengths of the Chinese economy and Chinese growth compared to what the kind of figures the West posts. If that wasn't enough, the second half of the week sees the opening shots of the US earnings season. You've got JP Morgan, Wells Fargo, and Goldman Sachs on Wednesday, followed by PepsiCo, Bank of America, and Citigroup on Thursday, and then Morgan Stanley on Friday. As you can imagine, that's a lot for the Dow Jones and the rest of the US markets to deal with this week. And with the Dow hitting all-time highs last week, investors are really going to be looking for justification of those levels. And there are potentially plenty of things that could undermine confidence in the Dow Jones this week, especially if the bond auction and then the inflation figures on Tuesday reignite fears over rising bond yields and inflationary pressures, the same kind of sort of value eroding fears we saw a couple of months ago.